Imagine waking up one day and realizing that the US, the world's largest economy, is staring down the barrel of a financial catastrophe. It's not just a distant possibility anymore, it's a ticking time bomb, and the fuse is getting shorter. The US national debt has reached an eye-watering $33 trillion. That's right, trillion with a T. To give you some perspective, that's nearly 3 times the total debt of every country in the European Union combined. But here's the kicker. This isn't just a US problem. This is something that could shake the very foundation of the global economy. So how did we get here, and why should you care? Let's break it down. The US has always enjoyed a special financial status. The US dollar is the world's reserve currency, meaning that it's the go-to currency for international trade. From oil deals to electronics, the dollar is the currency that greases the wheels of the global economy. This has given the US a unique advantage. It can run up massive debts because the demand for dollars is high. Foreign countries need dollars for trade, which allows the US to borrow money with relatively low risk. It's a situation that many economists call the exorbitant privilege. But what happens when that privilege starts to unravel? As the US borrows more and more, it's facing an ever-growing debt burden. The interest alone on this debt is now in the hundreds of billions each year, taking away funds that could be used for other vital purposes, like healthcare, education, or infrastructure. The US government is forced to borrow more just to pay off interest, creating a vicious cycle. And here's where the real problem lies. What if the US can no longer afford to pay its debts? What if the country hits a point where it defaults on its obligations? It might sound extreme, but it's not entirely out of the question. Now, let's step into the terrifying reality of what a US debt default would mean. If the US defaults on its debt, it would send shockwaves through the global financial system. The US dollar, which has been the anchor of the global economy for decades, would lose its value almost overnight. This would trigger a massive inflationary spiral, making everyday goods, food, gas, and even basic services suddenly unaffordable, and it wouldn't just be the US feeling the heat. Countries and corporations around the world that hold US debt would suffer huge financial losses, destabilizing markets everywhere. Global banks, investors, and governments would be scrambling to cope with the fallout, and international trade would come to a grinding halt. This is no longer a hypothetical scenario. It's a looming threat, but there's more to this story. The US dollar's dominance has allowed the US to maintain its geopolitical power. It's been able to fund military operations, foreign aid, and global initiatives, all thanks to the dollar's central role in the financial system. But what happens when other countries like China and Russia decide they don't want to rely on the US dollar anymore? They've already started creating alternatives, trade deals in their own currencies, global investments in yuan, and even plans for a new reserve currency. If these efforts gain traction, the US risks losing its financial supremacy and with it, its political influence. Now, let's get to the heart of the matter. Why is this happening? For decades, US politicians have turned a blind eye to the mounting debt, continuing to increase government spending while doing little to address the underlying issues. A lack of fiscal responsibility has led to budget deficits year after year, with little to no plan for reducing the debt. And while political gridlock continues to prevent any real change, the debt grows larger, creating a time bomb that will soon be impossible to ignore. The reality is clear. If the US doesn't act now, it risks facing an economic disaster that will ripple across the globe. So here's the big question. How much longer can the US keep going down this path before it hits the wall? And when that day comes, will the rest of the world be ready for the fallout? This is a global crisis in the making, and it's one that no country, no market, and no person can afford to ignore. As we move forward in this global financial puzzle, the stakes only grow higher. The US debt crisis is not just about the US, it as a challenge that ripples across the entire global economy. Let us dig deeper into how this massive debt impacts geopolitical stability and why this could be the most significant financial shift of our time. First, we need to talk about the role of the US dollar as the world's reserve currency. The US has long benefited from the fact that the dollar is at the heart of international trade. But this privilege has been under threat for years. Countries like China and Russia, along with regional powers in Europe, have been pushing to move away from the US dollar in favor of other currencies. They see the massive US debt as a threat to the dollar's value, and they're preparing for a post-dollar world. In fact, China has made moves to establish the yuan as a global trading currency. Russia has started to settle trade agreements in rubles and other currencies. And we've even seen regional efforts to trade in gold and other non-dollar assets. The shift is happening and the US can't afford to ignore it. So, what does a move away from the dollar mean for the global economy? It means that the US could lose its ability to print money without consequence. Currently, countries around the world are required to hold US dollars in their foreign reserves. But if the dollar loses its position as the world's primary currency, the US will face higher interest rates and inflation. The world will no longer be so willing to buy US debt, and this will make it significantly harder for the US government to finance its spending. If foreign buyers stop purchasing US bonds, the US will need to find new ways to raise funds, likely by printing more money, leading to more inflation and a weakened dollar. But the consequences go beyond just economics. The US's global military and political influence is directly tied to its financial dominance. The military-industrial complex, which relies on a robust economy to fund defense spending, could be forced to scale back operations if the country faces an economic collapse. America's influence in global institutions like the United Nations, World Bank, and the International Monetary Fund would diminish. The economic power of the U.S. is its geopolitical advantage, and losing that advantage would make the U.S. less able to defend its interests worldwide. Now, let us take a moment to look at how the U.S.'s debt crisis could change the landscape of global power. If the U.S. can't pull itself out of this debt trap, it risks losing its position as a leading global superpower. Rising powers like China and India, with their rapidly growing economies and political influence, are already looking for ways to fill the void left by the U.S. In fact, China is using its Belt and Road Initiative to build new infrastructure projects worldwide, solidifying its economic and political ties with countries across Asia, Africa, and Europe. If the U.S. continues down its current path of debt accumulation, we could soon see a shift in the global balance of power, where China or even a coalition of countries steps up to fill the vacuum. So, what does the U.S. need to do to avoid this financial collapse? It's clear that drastic action is required. First and foremost, the U.S. must address its fiscal policies, cutting spending, reforming entitlement programs, and increasing taxes. But these solutions are not politically easy. In fact, they're often politically toxic, which is why we haven't seen significant action in the past. The political deadlock in Washington has made it nearly impossible to come to a consensus on these issues. However, the longer the U.S. delays, the more entrenched the problem becomes. At some point, the bill will come due. And here's the most concerning part. We might be reaching that tipping point. The U.S. debt has already surpassed $33 trillion, and it continues to grow at an alarming rate. The global economy is inextricably tied to the stability of the U.S. economy. And if the U.S. fails to manage its debt, it could send shockwaves through every country that relies on the U.S. for trade, investment, and security. The financial collapse of the U.S. would trigger a global recession, with stock markets crashing, currencies collapsing, and unemployment rates skyrocketing. But perhaps even more troubling than the economic fallout would be the political consequences. A destabilized U.S. would lose its ability to influence world affairs. This would open the door for rival powers like China and Russia to reshape the global order in their favor. This isn't just about money anymore. It's about the future of global power and influence. So where does this leave us? The truth is, the U.S. has one chance to act now. The clock is ticking, and the longer the U.S. delays, the higher the risks of an economic and geopolitical collapse. The future of the global economy and the global order depends on how the U.S. handles its massive debt. The consequences of inaction could be catastrophic, and the world is watching closely. The question is, will the U.S. rise to the challenge and take the necessary steps to secure its future, or will it allow the debt crisis to unravel everything it's built? The next decade will be a defining moment in world history. The U.S. has the power to turn this around, but only if it acts decisively now. Time is running out, and the world's future hangs in the balance.